This is Matthew Kratter's Bitcoin University, and today I want to talk about Trump, tariffs, and Bitcoin, which is obviously on everyone's mind. So the question we're trying to answer today is why such incredibly high tariffs? Possibility number one, we talked about this a little bit last week. Possibility number one is that tariffs are intended to crash the stock market, thus pushing money into bonds, lowering yields, and giving the U.S. government lower rates at which to refinance its $9 trillion in debt this year. The objection to this would be that crashing stocks kill capital gains tax receipts, thus blowing out the U.S. budget deficit and requiring even more debt to be issued by the U.S. government, thus making the U.S. government's debt situation even worse. Also, much of this debt that needs to be rolled this year in 2025 is actually short-term debt and thus only affected by Fed interest rate policy at the front end of the curve, not capital fleeing into 10-year notes. So that would be the response to that. The response back would be, or the counter response would be, that crashing stocks could get the Fed to cut rates sooner, which is clearly what Trump wants, and it would help with refinancing the U.S.'s debt. The counter response to this, of course, is that if the Fed cuts rates, but the deficit blows out, it may still not be worth it. Maybe he's playing some sort of 5D chess as well. This is what just another pod guy is saying here, that U.S. Treasury Secretary Scott Bessent has a higher IQ than 99.9% of FinTwit, and the people around Trump know it. He may not be consulted on every detail, but you best believe he was in the room when they contemplated how they want global trade to look like at the end of all of this. It's not cope to assume that most second derivative outcomes and fallout were preemptively discussed. So this is probably not the Trump administration shooting from the hip and being surprised that, oh my gosh, we just crashed the stock market, that they've actually thought through these possibilities. That makes sense because Bessent does have this hedge fund background. He's been around forever. And it would look like I basically made this whole video, then this news began to come out that now Trump may withdraw all of the tariffs or most of the tariffs, but he'll keep very high tariffs on China. He might levy an additional 50% tariff on China. And that leads to another interesting theory, which would really confirm that they may be playing 5D chess here with Bessent. Larry Lepard summarizing it here. This was a tweet from Derek, but this is Larry's summary. And I actually just read this a couple minutes ago, so this probably deserves its own video, but I'm including it here as sort of late breaking news. Very interesting theory. The extreme tariffs are also coming at a time, the extreme tariffs on China are also coming at a time when Bessent sees a recession or depression happening in China. He emphasized this several times in the interview with Tucker Carlson a couple days ago. By boxing in China and shutting down their exports, basically freezing them out with these huge tariffs, he's creating the same conditions that led to the big short of the British pound. If the Chinese yuan collapses, then it will cause a global flight into U.S. Treasury bonds, driving down interest rates even further for when they go to refinance the $9 trillion of expiring debt. So make of that what you want. That really is 5D chess. This could lead to the complete collapse of the CCP in China. So we're talking about a really big thing here that I'm a little bit skeptical that this is what they're trying to do. But if they are trying to do it, this is definitely 5D chess. If you're finding this video helpful so far, I just ask you to help to support this channel's educational mission. Hit the subscribe button. That does really help. Leave a like, leave a comment, question, suggestion for a future video, and share this video with a friend or family member. So that's basically possibility number one. Possibility number two, the reason for these tariffs could be that these tariffs are just a negotiating tool to get other countries to lower or eliminate their tariffs on U.S. goods. The response to this, the rebuttal to this would be that Trump put tariffs on countries that actually don't have any tariffs on the U.S. So rather than trying to put tariffs on a country that has tariffs on the U.S. and then get them to remove the tariffs, he basically has put tariffs on countries that don't have any tariffs on the U.S. The counter response or rebuttal to this would be Trump did that because we still have trade deficits with those countries. And this is what Jack Farley is citing here. Trump saying they're dying to make a deal. And I said, we're not going to have deficits with your country. We're not going to do that because to me, a deficit is a loss. We're going to have surpluses, in other words, trade surpluses, or at worst, we're going to be breaking even. Now, if this is actually how Trump is thinking about trade and tariffs, then I think he's making a big, big mistake because trade deficits are not necessarily a bad thing. For example, an example of a trade deficit would be the U.S. trade deficit with Vietnam, for example. So I believe these are 2024 numbers. The U.S. imported $136 billion worth of goods from Vietnam. Vietnam imported only $13 billion worth of goods from the U.S. So this would mean that the U.S. has a trade deficit with Vietnam of $123.5 billion. You basically subtract out those two numbers, and it would mean that Vietnam, of course, has a trade surplus with the U.S. But this is a choice that's been made by U.S. consumers and corporations to buy stuff that's made in Vietnam. No one put a gun to their head. You want to know who else has a trade deficit? You can think of a personal local example. My family has a trade deficit with our local Vietnamese restaurant. We buy food from them, we eat there, but they never buy anything from our family. So why is this Vietnamese restaurant exploiting my family so badly? Because the money is only flowing one direction. Of course they're not, since my family's trade deficit with this restaurant is voluntary. So the counter response or rebuttal to this would be, we're not talking about restaurants and family choices in dining. We're talking about an unfair global monetary system that allows countries to dump their cheap goods on the U.S. You hear this phrase a lot coming from Trump and MAGA. The rebuttal to that, or the response to that, would be that no one is dumping cheap goods on the U.S. U.S. CEOs made a conscious decision, supported by shareholders, to outsource manufacturing to Asia. And this was a rational decision given that the strong U.S. dollar makes U.S. manufacturing globally uncompetitive. And this has been true since certainly 1971. Why is the U.S. dollar stronger than it should be? Because it's the global reserve currency, the global reserve asset. And so lots of people have to own U.S. dollars that otherwise wouldn't. And if the U.S. dollar were not the global reserve currency, then you would see purchasing power parity adjustments across currencies. They would basically trade a little bit differently. The U.S. dollar would weaken against most currencies, most other foreign currencies, and this would allow U.S.-made, American-made goods to be more competitive on a global market. Really, the only way, as I see it, the only way that manufacturing can return to the U.S. in a big way is if the U.S. dollar loses its reserve status. Now, certainly Bessent must understand this, and Trump must understand it at a certain level. But here's the problem. Trump and Secretary Bessent say they don't want that to happen, and they want to have a strong U.S. dollar policy. Of course, every administration over my lifetime always says they want to have a strong U.S. dollar policy, and then, of course, most of them want it to be weak because it pumps the stock market, etc. So there is this contradiction here. Do you want the U.S. dollar to be stronger? Do you want Bitcoin to be stronger? What exactly are they up to? This could be more 5D chess, or it could just be stupidity. I don't think having a trade deficit necessarily with a country is a bad thing. Of course, when you have trade deficits with every country and you have the global reserve currency, that's a choice that's been made. If Trump wants to undo that, maybe he can't just say, I want to undo the U.S. dollar's global reserve currency, but we're going to let the chips fall where they may, and we're going to take policy decisions that will lead to that outcome. Possibility number 3 for these very high tariffs: Trump wants to return us to the more prosperous times of the 19th century when the U.S. federal government was funded by tariffs rather than income and capital gains taxes. Here's Trump saying from 1789 to 1913, which is when the income tax was introduced and also when the Federal Reserve was created. From this period, the U.S. was a tariff-backed nation. The United States was proportionately the wealthiest it has ever been. And Nat Rothschild here has a summary that basically expands on this. Trump's tariff strategy isn't just about trade wars, it's about fundamentally reshaping America's tax structure. By proposing massive tariffs on imports, 60% on China, 20% elsewhere as of April 4th, he's actually reviving America's 19th century fiscal approach when tariffs, not income taxes, funded the federal government. This explains his simultaneous push for expanded tax cuts. The planned shift revenue burden from domestic taxpayers to foreign producers while pressuring companies to manufacture stateside. It's a return to economic nationalism where tariffs serve dual purposes. And here's a very important point he makes: protecting American industry and replacing income tax revenue. I'd have to say I'm extremely, extremely skeptical that we can have enough income from tariffs and that the effect on prices for U.S. consumers won't be bad, but that we can have enough U.S. tariffs to replace the income tax. It'd be great if that happens, perhaps. I'm skeptical, though. And as Nat goes on to finish here, this isn't just protectionism, it's a calculated attempt to restructure how government funds itself while keeping its promise to lighten Americans' tax burden. So this is just a restatement, basically trying to move the U.S. back to a tariff-backed nation. Maybe this is what Trump's trying to do. And I think that there's a problem here with Trump's account of economic history, especially 19th century history. What made America great in the 19th century was not the tariffs. Rather, what made America great and incredibly productive, certainly in terms of technology and invention and general prosperity, the invention of cars, airplanes, light bulbs, phonographs, telephones, everything we use in the modern world was really invented in the late 19th century. All of these things were the result not of tariffs, but the result of a general economic freedom. In the latter half of the 19th century, the U.S. had incredible economic freedom. There was no central bank. We were on a gold standard. There was no income tax. There were much freer markets, much less regulation. And the U.S. federal government was actually tiny compared to where it is today. Back then, there was no welfare state. There was no CIA and deep state. There were no endless wars that helped to fund the military-industrial complex and all the Washington, D.C. hawks and warlords. And also there was no regulatory capture by banks, bankers, big pharma, etc. So I don't think there's anything magic about tariffs. Tariffs are just another form of taxation as theft. Tariffs are just another way that governments steal from productive people, maybe across borders, but it's still a form of government theft. Tariffs interfere with the free exchange of goods, and it's this free exchange of goods that's really at the heart of human flourishing. We all trade with each other. There's no reason that everyone has to be a specialist in everything. This extends to countries as well. It's actually usually the stupidest, worst-run countries that have the highest tariffs. If we go to this Wikipedia article and we sort based on the WTO numbers, looking at a simple average of tariffs, we can see the countries that have very high tariffs, or the highest tariffs, I guess this is 2017 data, are not countries that you normally think of as being economic miracles. We have the Bahamas at the top, which is has a special function as a tax haven. But then you have countries like Sudan, Iran, Algeria, Egypt, India, Cameroon, Central African republics, Zimbabwe, etc. These are not really economic miracle countries. So I don't see how tariffs are a solution to what ails the U.S. unless they're just a very temporary tool for forcing negotiations. And if our allies, if these countries that have had tariffs put on them call our bluff and decide to keep tariffs high for a while, we could have a global trade war that goes on and on and on. And as many of you know, this was one of the contributors to the Great Depression. So tariffs are not a good thing. Maybe they're a temporary negotiating tool. Maybe we're trying to bring down China and the CCP. That would be very interesting if that's true. But if it were me and I were advising Trump, I would not be pushing tariffs. I think this is probably not going to end well. And here's what I think Trump should be doing instead of focusing on tariffs. He should focus on abolishing the Fed. This is very simple. And there are many people in the party who support this. He could bring Ron Paul in. He should abolish the capital gains tax. It's a ridiculous tax. He should abolish the income tax if that's what he wants to do. He should get rid of as much regulation and red tape as possible to make it easier and faster for people to bring manufacturing back to the U.S. He should also abolish the U.S. dollar along with the Fed when he abolishes the Fed and move the U.S. onto a sound money standard like Bitcoin. I think this would do more to fix our systemic ills than anything else. If you want manufacturing to return to the U.S., as Trump says, then you do need to kill the U.S. dollar as the global reserve currency. So I think these are all the things that Trump should be doing instead of tariffs. But obviously this is playing out very quickly in real time. By the time I edit and post this, the whole world may have changed, but hopefully this is still relatively relevant when you watch it. And this is just me trying to think through the different possibilities, what is going on here with these tariffs. And we'll continue to monitor the story. I'm not sure I'll be able to make a video tomorrow, but I was able to make one today, even though I promised it wouldn't be till Tuesday or Wednesday. So really just depend on my internet connection as I continue to travel. But I hope you found this video useful. If you enjoyed this video, be sure to hit the subscribe and like buttons. Hit the notification bell if you want to be notified when I publish my next video. And let me know your questions and comments in the comment section below. Thanks a lot for watching, and I'll see you in the next video.